Hello, dear traders worldwide. This is Gabriel. Welcome back to my channel, Forex.Real.Trader coaching sessions. Today, I will continue with the technical analysis, and I will focus basically on the origins of the candlestick patterns, formations, and very specifically, we're going to talk about the Doji Stars. So about the origin, so we can say that the Japanese candlesticks date back to the 18th century and were developed by Munehisa Homa, a Japanese rice trader. He discovered that market psychology influenced price movements and used candlestick patterns to protect future prices. This technique was later introduced to the Western world by Steve Nissen, that I'm pretty sure you have heard about, in the late 20th century. The thing is that each candlestick represents a specific time period. Could be minutes, hours, days, weeks, months, or even years, right? And each candlestick provides very critical information, okay? So regarding, in this case, the dodges that I want to show you, is basically because they show indecision in the market, okay? So a doji pattern signals also potential reversals, right? Or continuation, depending on the momentum and depending on the point that you are watching, that you are observing the market, right? Dodges can be after a full bullish or a very strong bearish market. And when they appear, it's because there is a shifting in the momentum, okay? And that is the indecision, okay? As you can see on the screen, the Doji Stars, right, that we're going to analyze are basically like a cross, right? No real body at all. So when we talk about, for instance, tops, right, of an uptrend, that is called a bearish Doji Star. And when they are on the bottom of the movement, it means that it's a bullish Doji Star. So let me show you on the very charts how it is observed. For example, here we just identified a Doji Star, right? Look at the formation of this candlestick. Is basically, right, is basically a cross. No more. It's just this. This is Doji. What is the meaning? Remember that any candlestick has opening and closing prices. For instance, if we have a bull candle, for example, this one, the open price is close, right, is below here, right, in the lower part, and the closing price is up. When we have a bear candle, it means that the opening is high and the closing is low, right? So that is the theory, right, very simple, of opening and closing, whether we have a bullish or a bearish candle. With the dodges, right, we can identify something here, that the opening and the closing is exactly the same. So that definitively indicates indecision. So when those dodges appear, we must be very observant of the market and, of course, other indicators. For instance, this very doji that we identified here, this one, okay, comes after a bull candlestick. That is a good indication because it definitely, and it's almost amarubozu. Look at this. It's almost amarubozu. So it's very strong. And suddenly, the next candle, and look at this, I am watching the 1 hour time frame. So in the next hour, definitively, the buyers and the sellers do not agree, and they are in the pushing forces. So the opening price is the same as the closing price. That is a strong indecision. So what happens next? I do not trade, and I want to clarify this, I do not trade only candlestick patterns. I need to be very observant of other indicators, other tools that I have to use in my trading plan. But when we observe something like this, in which I have a first indication that is a strong bull candlestick, then I have the doji, and the next candle engulfs, right? This one is a bear, and this one engulfs the doji. That is a nice indication to proceed. Okay, to proceed on what? To proceed on my trade. Let's suppose it's just a hypothetical scenario that I wanted to trade something like this. Remember what I have mentioned in previous videos, and is that I have to be very organized on the way how I place my entries, my stop losses, and my take profits, right? For example, I just waited for this candle, the bear candle, to close and engulf, right? In this case, it's evident that it engulfed the Doji Star. So in that case, let's suppose that my entry point is going to be here. My stop loss is going to be above, around 2 pips above my bear candle, right? So this is my stop loss here, and my take profit. Remember how we calculate this. So we're going to calculate the stop loss based on the ATR volume. So the ATR is 15 pips. So what I'm going to do is to multiply 15 pips times 1.5 ATR. That gives 22 pips. So my stop loss is 22 pips. So if this is my entry point, my stop loss, ideally, in order not to be stopped out, should be here around the price of 4493. So my stop loss is here, right? So if I have 20 pips or 22 pips in my stop loss, means that my take profit should be 2R, and the 2R is 40 pips. So I should place my take profit around this level. So it's around here, all right? So that's how I place it. Remember, every time we trade, we always said our what? Our stop loss, right? Stop loss. And this stop loss is what? Is 1 ATR times 1.5. That gives me a ratio of 1R. So if this is my risk for the stop, my take profit has to double the 1R. So it has to be 2R. For this reason, I am risking here 20 pips, right? According to the ATR level in this moment here, right? And my take profit should be 40 pips. And look at this. When this next candle, this one, so after I detected this one, I detected the doji, then I waited for an hour for this bear to confirm. I placed my entry, and after another hour, so this is a process of 2 hours. After 2 hours, my what? My entry was triggered by this candle, and immediately it started to drop. This one, in trying to do some correction, it retraced a little, but then it came down, came down. And in a moment here, my take profit was hit. So there was a winner, okay? But of course, those are hypothetical scenarios in which we identify the different formations. This is, for this is starting here, right? The bearish Doji Star. And now let's observe a bullish Doji Star. Our bull Doji Star is this one here. Look at this. Here the scenario is a little bit different from the previous that we just watched. Look at this. We have our Doji Star. Is this one in here? This is my Doji, right? It precedes, right, a strong correction, right? And here's a kind of gravestone. That is good indication. The next candle is also indecision, right? But somehow it is what? It is bullish and is engulfing the Doji as well. So in this case, it's a nice signal, okay? Because I can observe my indecision here. This one is indecision. This one is indecision. But indecision of what? Indecision of the bear. So it was coming down and suddenly two dodges appear. And then appears this one, okay? And somehow starts to get some strength. So what is the process in here? Remember the placement. So I'm going to place my trade according to the following criteria. Again, my entry point is when I wait for this candle here, this one closes. So when the next candle to the Doji closes, I'm going to place my entry. All right, so this is my entry. Let's see the ATR level in this moment here. When this one closes, the ATR level is 23 pips. So I'm going to multiply 23 times 1.5 ATR. That is going to be my stop loss on 34.5. So I'm going to set the stop on 34.5. So stop is 34. Let me drag it a little bit more. 34.5. So this is my entry here. 34 is around this part in here, right? So I'm going to place it right here. This is my stop. Okay, 34 pips. Okay, if I'm risking on my stop loss 1R, that is 34, so my take profit should double it. So times 2R, so that is 69 pips. So 69 pips is, let's see here, 48, 50, 64 pips is around this level here, right? So I'm going to place it here. That's my entry point. Sorry, that is my take profit. Okay, let's see what happens in that very moment. And there is another observation that you should pay attention for, is here when this one is triggered, right? When this one is closing, observe that there is right here a cross, right? So the ADX shows me a cross, a bullish cross, right? That is a nice indication as well, a kind of confirmation. But I repeat, I never trade only focused on candlestick patterns. It's just that some other signals show me that this very particular pattern is strong. So look at this. The next hour after I place my trade, in the next hour, this candle here, this one triggers the trade. And immediately, okay, at the next hour, in the next hour, this candle was bear. This one was bear and then turned bull, okay, but didn't reach my entry price. In the next hour, this scenario is different. A little correction going exactly on my entry price, and then going up, going up, going up, and here hitting the top of my take profit. So this is another winner, okay? And look at this. It never came close, so close, right, at all to my stop loss. And my stop loss was placed according to the ATR times 1.5, right? So that is the way how we identify the dojis. In this case, I focus in this video on the Doji Stars and the potential way of trading it, right? So, my dear people, important thing, always wait for confirmation, right? When we are trading patterns, we need confirmation. Combine it, for example, as I did in here, I combine it with ADX, right? You can combine this with support and resistance, also with RSIs, with with different tools that you can see and you understand, because that is the thing. You need to understand every single tool that you use, right? For example, here you can see that there was resistance. There was support. Look at this. Here there is support on the what? On the EMA, right? On the EMA 50. That is another indication for you to see that this is a potential bull move. And everything started with what? Started with the Doji Star, right? So again, my dear people, if you find these videos, if you find the channel useful, please subscribe, like, and share. See you in the next video about candlesticks. Thank you very much.